Okay, let's see if this works. How's everybody doing out there? So, welcome to the Crypto Wave. This is a new YouTube channel that I'm hoping to create, hopefully with all kinds of fun content about cryptocurrency, the blockchain, what is it, where's it going, and then obviously any feedback that you guys give. If there's any questions or anything that you guys are curious about, anything that I can help you with, that's the entire purpose of this channel. It's to help those that are new into the space. When I was first starting getting into it, which was back in 2009, my brother actually got me into this, and a buddy of mine, me and him went pretty heavy into it, looking at all kinds of stuff. We were miners at one point. Currently I'm trading, flipping ICOs, all kinds of fun stuff, and we can go into all of that on a different video. But the entire time I thought, why isn't there groups or YouTubes for just the basics? Currently when you go onto YouTube, there is YouTube channels galore with all kinds of blockchain trading. I mean, you name it, there's a YouTube channel on it, but there isn't one that just kind of goes basics on everything. I thought I had to teach myself everything I know about cryptocurrency, how to transfer funds, how to trade, how to download Bitcoin wallets, how to run miners. I mean, you name it. It was all through trial and error and research. And it would have been a heck of a lot easier if there was YouTube channels that went over these basic things, questions that you don't think normally would arise, but they do as you're trying to get into this space. It's a fairly new space. Not a whole lot of people know about it. Obviously, a lot of people have heard the term Bitcoin. A lot of people know that it's some type of a digital currency, but I don't think they truly realize what it is, what it's trying to do, what's it a part of, and honestly, the economy and the community that's built around it. Not only with Bitcoin, but also all the coins that have kind of come to fruition from this new revolution. Within the cryptocurrency space, the purpose of it is to be decentralized. It's a blockchain technology, which we'll get into in a little bit. And whether you believe in Bitcoin, whether you believe in any of the other coins such as Ethereum, Litecoin, Neo, you name it, the technology itself, I think, is here to stay. Is that going to be in the capacity of Bitcoin? We don't know. But in the moment, Bitcoin is the top dog. So let's just jump right into it here. So one of the first things that I like looking at, if you're new to the market, you're probably going to want to know, what are the coins, what are they worth, what are they doing, where do they come from. One of your biggest tools that you can use is, and this is the one I like, there's a bunch of sites like this, but this is the first one that came out, and so I've just been loyal to it since it originated. It's called coinmarketcap.com. On here, it breaks down in rankings from 1 to 1,614 cryptocurrencies, and what it does is it basically tells you how big is their market cap at the moment, what is its current price, how much volume has been trading over the last 24 hours, how much of it is circulating, and then obviously how much has gone up or down in the last 24 hours. The other good thing about this site is there is a total market cap. So right now the entire crypto world of all 1,614 coins totals 464 billion at the moment, which is an incredibly high number if you truly think about it. This is just the beginning of, I think, a huge revolution that will be changing the financial sector of the world, really. This will be revolutionary, and at the moment it hasn't even really hit mainstream yet. So if you can imagine, at the moment Bitcoin's running around $9,800 per coin, and the market cap of every coin at the moment is 464 billion. And last I looked, I believe there's like less than 2% of the world's population uses Bitcoin or a cryptocurrency derivative. So imagine, even if that were to go to 3%, 4%, even 5% of the world population in the next few years, where is all this going to go? Anyway, I digress. The purpose of this particular video is to start from the beginning. The number one, it was the first ever. It's called Bitcoin. This is the one that everybody knows about. This is the one that has the biggest market cap. As you can see here, 167 billion basically at this point. Total supply, this is how many are actually out there being used as we speak, is about 17 million. And these are our key numbers. But so let's just jump right into it here. So the question is, what the heck is Bitcoin? So what we'll talk about real briefly is obviously Bitcoin wallet's private keys. That's really important. This is the wallets and the password, so to speak, related to that wallet that you'll have to use in order to exchange currency, either amongst peers, through exchanges, you name it. If you want to send or receive a Bitcoin or a percentage of a Bitcoin, you're going to need some type of a wallet. Blockchain technology, very brief, simple explanation of blockchain technology. It is highly complex and even, I'll be honest, beyond me. That's where I'll use my brothers and various other people I know to dig into the computer science of that. Pros and cons of Bitcoin. Proof of work, what does that mean? This is what Bitcoin runs on. There's other algorithms such as proof of stake, there's masternodes, there's X11, there's all kinds of different types of work, but Bitcoin itself is proof of work, and I'll explain what that is. And then obviously some of my thoughts at the end. So first and foremost, wallets. So the way Bitcoin works is it was initially supposed to be anonymous, meaning the purpose of Bitcoin was to avoid third-party involvement, meaning if I were to want to send some form of money to you or somebody I know and not have to go to a Western Union, not have to go to my bank, not have to go to some third-party person and have that middleman charge a fee or charge a transaction fee or whatever the case it is, I should just be able to send from me to somebody and that'd be it. There would be no middleman. So everybody, if you were to create a Bitcoin wallet, whether that be a hardware wallet, software wallet, cold storage, hot storage, which we can talk about, you will be given a public or a what they call a Bitcoin address. This is one of my addresses right here. It's a series of numbers, uppercase, lowercase, as well as letters. And this transaction is linked to a particular wallet that I own. Anybody can see this. In fact, this is the wallet that if any of you wanted to send me a Bitcoin, you would put in this number, copy and paste it, or some wallets have a QR code now. This would be the digits that's associated to my particular wallet. This is also important because this wallet can also be tracked on the blockchain itself. So although it's anonymous, meaning you won't know it's me that owns this wallet, well now you do, but you don't technically know who owns the wallet associated to this code. The blockchain knows what this wallet does. So at any given time you can actually look at this wallet on the blockchain and see how much has gone through it, how much has been sent, how much has been received. You name it, it'll tell you, but it will no means tell you who owns it, and that's where the anonymity comes from. Now lately people are trying to get away from the anonymity of Bitcoin, and governments are trying to regulate a little bit more, and so there's a lot of these new sites that you actually have to register yourself on their site before they provide you this Bitcoin address, which will then take away that anonymity. However, there is a million different ways that you can use a Bitcoin wallet without having your information public. This is also perhaps one of the cons we can go into later. There's a lot of controversy because of how anonymous it is, that technically I could send money to, you know, a terrorist or something. Obviously I don't, but since there's no names associated to it, and so there's no tracking it, you can actually send it to whoever you want, and there's no way to tell who it's going to or who it's coming from. So it's a big controversy currently in the sector, and there's a million different coins that have tried to come out and rectify that. But you know, it's kind of tough to say. I don't know enough of the statistics. I'll have to look into it, but I would imagine the US dollar is laundered just as much as Bitcoin is, if not more. simply because the dollar is utilized by, 100% of the U.S. population. Bitcoin is currently being utilized by, I think it's less than 1%. So I don't know. Something I can look up in the future. So once you're given this wallet information, you're also given what's called a private key. The private key is 64 letters and numbers, very similar to this, although basically it looks like this, but it's a different series of numbers and letters that you can consider as your password. Here's the trick. If you lose that private key, that 64-digit code, you are out of luck. You're SOL. There's zero way to obtain that private key ever again. There's no remember my password. There's no forgot my password. There's nothing you can click on. There's no customer service you can call. If you lose that private key, you no longer have access to the funds that are associated to the wallet that was linked to that private key. So all the sites, when you log on to create a new wallet, or if you're going to use a new wallet someplace and they tell you what your private key is, you need to save that, lock it up in your fire safe, do whatever it is you need to do so that you can recover your funds at any given time. Because say this is saved on your desktop. You have a desktop wallet and your computer crashes. Without the private key, you can take this wallet anywhere. You can log on to another computer. It'll say, what's your wallet? You tell it the wallet. It says, what's your private key? If you put in your private key, it backlogs everything else from this wallet, and you're back up and running again. If you don't have the private key, you're SOL. Hopefully that makes sense. I can go into more details later if you like. We already talked about how it's anonymous. It kind of is, although, like I said, governments are kind of getting involved a little bit more, and they are trying to make it less anonymous. And again, if you lose your private key, you are basically out your funds. So, blockchain itself. So here is the simplest way that I can explain what blockchain is and what all this technology is based on or branched from. So if you imagine going back to my address here, let's say that I use my address. I have we'll say $1. Let's make it easy. $1 or 1 Bitcoin, we'll say. And I want to send it to somebody. So I'm going to send 1 from me to you. It uses this wallet address, creates a transaction with the amount that I want to send. It sends it to you, and it creates a link in the chain. And within that, this transaction is given a digital signature of a series of letters and numbers, upper and lowercase, similar to what all these things look like. But that is what confirms that I sent from me to you. Now, there's miners out there, and this is where the proof of work comes into concept. In the beginning of Bitcoin, the simplest way was computers would then take this transaction, it would take the code from my wallet to whatever wallet you have, it would compare this transaction code that was generated and to confirm that it's accurate. Now here's where the blockchain comes in. Let's say you, having received that $1 or 1 Bitcoin, we'll say, want to send half of a Bitcoin to him, whoever him is. Here's your transaction. It creates another long transaction code. In order for your funds to go from you to him, the computers or the miners' job is to take this entire transaction code that you've created. I think it's like 46 digits. No, actually I think it's more than that. Anyway, it takes a new transaction code and links it to the previous transaction code that you and I, so it knows that the half coin you're sending him came from the 1 coin that I sent you. The miners then decode this. They say, okay, this transaction connects to and matches this transaction. It is a forward-moving currency. It then confirms it. Once the computer confirms that the transaction you created is not hoax, it's not false. It's not, you didn't make up the numbers. If you make up the numbers, it'll deny it. If you simultaneously try to send half to him and half to her and then some back to me, it'll create 3 transaction codes. The miners will say, okay, well, we know one came from here. It's now tracking one to him. It's tracking one to her. In the 3rd transaction that you created, the miners will say, can't do it. It's a continual chain of data. So now he has some, we all have some. He wants to send some to her. So again, he sends a Bitcoin to her. It creates a brand new link in the blockchain. It's another transaction code that now has to be verified. This transaction code has to be verified with transaction code prior to him, which then has to be verified to the transaction code that was originally generated. And again, her wants to send it to whoever, transaction code generated, links to the previous transaction, which is already linked to this transaction, so on and so forth. And the blockchain continues to expand. Every transaction on the blockchain, ever created on Bitcoin, is within this chain. You can go back to the original Genesis, what they call the Genesis block, which is the first block ever mined in the first transaction that occurred. You can go back in time through the entire blockchain and see it. It's like a chain, not a chain of command. What's the term I'm looking for? It is a chain of, anyway, I'll come back to me. So what does this mean? As the miners are decoding this from me to you, you to him, him to her, etc., etc., the longer Bitcoin is in existence, the longer this chain gets. And if you're 10,000 transactions from now, the miner's job is to verify that that 10,000th transaction links to every transaction code that's ever created to the original. What does this do? This creates a distributed ledger, which is just like your bank provides you with a ledger of all transactions that have occurred. These ones are open for anybody to verify, to look at, to confirm, to watch. It's like having your bank account information available for everybody to see, like handing them a printout of your checking account, but without any account numbers on it. So anybody can look at any transaction ever on the blockchain. So the trouble with this is, at the moment, because Bitcoin's been in existence for so long, this obviously all creates data. It's created over 150 gigs at the moment of data, which is a huge amount. So in order for somebody to do a mining job, you would have to download 150 gigs worth of data, which takes days before you can start mining and helping the computers confirm these transaction codes. Hopefully that makes sense. So, pros and cons to this whole system of Bitcoin itself. 1, the creator of Bitcoin, which nobody really knows who it is, there will only be 21 million Bitcoins ever produced. This is a pro in my book. Why is it a pro? Because there will be no inflation. Now, each Bitcoin can be broken down into what they call Satoshis, which are thousandths of a Bitcoin. So you don't necessarily have to have one Bitcoin. You can invest and get 0.001 Bitcoin if you really want to, and it would just be a percentage of a Bitcoin. But because there will never be more than 21 million Bitcoins produced, this creates scarcity. And this 21 millionth Bitcoin won't be mined until 2140, which I show here. The way the mining works and the way these coins are created is, as these transaction codes are being created and the computers, the miners, are figuring out this block or this link, every 10 minutes it bundles all the transactions that occur in 10 minutes, or as best it can. That's a different problem. But it basically bundles transactions within a 10-minute block. And the miners will figure out, because you imagine, during this time, this is branching off a million ways. He's sending somebody money, he's sending money over here, he's sending money to somebody over here. And all of those need to link onto the chain. Well, along with that transaction, when the computers figure out and say, look, his transaction is accurate. It's linked to everything before it. The miners get a percentage of like a finder's fee, if that makes sense. If their the computer is the one that says, yes, I confirm this, it is accurate, they get a finder's fee in Bitcoin. So they have an incentive to keep mining. Additionally, each time one of these is mined, they get a new amount of Bitcoins are released into the market. And that's where this 21 million comes from. At the moment, every 10 minutes, if I'm not mistaken, 12.5 Bitcoins are released into the market. That's what drives this number up. So if you look, there's currently 17 million Bitcoin currently circulating, because not all of them have been made yet. So every 10 minutes, 12.5 more are released. And who does that 12.5 go to? It goes to the miners, or whoever figured out this block, every 10-minute block, whatever computer figures it out, gets that 12.5. So that's a pro. There's no inflation, it's limited supply, the more demand becomes involved with it, the higher the price goes, hence the fact that we have $9,820 for one Bitcoin. That's what it would cost if you want to just buy one Bitcoin outright. Now again, you can buy percentages of that. So currently, there's a couple different stories out there. One is there's a gentleman who had millions of dollars worth of Bitcoin. He bought them back when they were $5 a coin. Now they're at 9,000. He had them on a computer. He threw the computer away, forgetting all about it. It's now in a landfill. There was tons of Bitcoins on that computer, and now he can't find it. So what that means is, with current estimates, they're saying by the time we hit the end of Bitcoin production, there'll probably be more like 18 million, give or take, because of the fact that people jumped on the hype back in 2009 or 2010, probably got, 10, 15 Bitcoin. At the time, there was worth maybe $15, and forgot all about it, threw away their laptop, threw away their hard drive, whatever it is, and they're gone. Well, imagine that over years and years and years. There's plenty of people who have thrown away or forgotten or lost their private key. Again, if you lose your private key, it's gone. So that's, again, another pro. So in reality, the supply that's already a pro is actually even less. So that's even more scarcity. Last Bitcoin will be around, so with a block, every 12.5 Bitcoins being released every 10 minutes. There's also another factor on that, and that factor is every certain amount of years there is what they call a halvening. So at the moment, this is in approximately 754 days, there will be another halvening. And what that means is the amount of Bitcoin released during that blockchain that the computers figure out is currently 12.5. After 754 days, that's actually going to be cut in half. So the amount of reward going to the miners goes down. At the moment, again, they're getting 12.5 Bitcoins per block. That's going to go to 6.25. Again, what does this do? This causes demand. Less coming out into circulation. The more demand there is, there's more scarcity. There's no inflation on it. So this is a bitcoinblockhalf.com. This helps keep track of it. This is telling you how many Bitcoins are generated per day. There's all kinds of stuff, but this is actually just the countdown to know. And this is really important for any of those that are mining, because your income is dropping by half. If you're hoping for your computer to figure out the next block to get this prize money, your income just dropped in half, even if you figure it out. Unless, of course, the Bitcoin itself has risen. So, I mean, if this hits 20, 40,000, that changes things. You're still making money in that aspect. So, so having pro and con. Block rewards decrease, so difficult for the miners, but pro in the fact that it causes more scarcity and decreases the inflation. Proof of work. So this is one of the things that I consider a con. So as I said, the proof of work could be the ultimate downfall of Bitcoin. So it's either a need for correction or something's going to have to change. So again, if you imagine at this current moment, it's 150 gigs worth of data from all the blocks created since Bitcoin began in 2009, I think it was. 150 gigs of data. Fast forward 10 years from now, if mass adoption keeps coming, this is going to be, incredibly high amount of storage and data. So the other thing is, the longer this blockchain gets, it's pure logic. The longer the chain gets, the more data it has to sift through. So the miners have to figure out if this transaction is legitimate with the entire blockchain from the beginning. It's taking more and more computing power to do. With that, it's taking longer and longer to figure out what the blockchain, or to create a transaction. In the very beginning, back when I first started in 2011, when I would send a coin to my friend, it would go in 6 minutes, if that, even less. Then a lot of miners came on. The power of the mining job went up because so many people got on board. So for me to send to my friend, it was almost instantaneous. Unfortunately, now if I were to send something to you, it would take, depending on how much you send and where you fall in the pecking order, it could take hours, because of the fact that it takes so much time for the computers to figure out this entire blockchain before it confirms that your transaction is legitimate. That is a huge downfall, in my opinion. Something needs to be corrected, and we can go into this into a different video. There's actually coins out there, such as Bitcoin Cash. This is a fork of Bitcoin. Bitcoin's an open source. Anybody can look at the coding and anybody can branch off of it. Bitcoin Cash is one of those that decided to. Its thought process was, it's going to correct the proof of work algorithm as best it can. It's going to increase transaction time by allowing more information to be put into each of these blocks. So at the moment, each one of these blocks on the original Bitcoin is about 2 megabytes. 2 megabytes each. It's all the data can fit on there. Bitcoin Cash decided each one of these should hold 8 megabytes, in essence multiplying the amount of information that can be placed onto it, making it easier for the miners to figure it out. That's a different video, but again, I think this, unless there's a really good correction that comes along, this could ultimately lead to the downfall, because if you look at, let me see if I have it. Here is the mining difficulty. So in the beginning, it was taking, if you can see my cursor, before mass adoption, it was taking no time at all for all the stuff to transact. However, the bigger and bigger the blockchain becomes, the more data it has to, and look how exponentially this is raising, the more data it has to process in order to approve your block, or approve your transaction within the blockchain. And now there's millions of blockchains or transactions that happen each day. So this difficulty is just exponentially rising. So what does that mean? You need bigger and bigger mining, or bigger and bigger computers to process this faster and faster. Otherwise, you would be sitting there all day. Another pro for Bitcoin is you're kind of your own bank. Again, you can transact, you have your own ledger, you can send to and from people, you can receive Bitcoin, you can exchange it for goods. A lot of people were still waiting for the mass adoption. There's an entire economy based on Bitcoin right now, but it's mainly for Bitcoin enthusiasts. So unless you're in Bitcoin or cryptocurrencies, a lot of the companies that use it, there's not an Amazon, there's not a PayPal, there's not a whatever you want to say, that has adopted Bitcoin yet. So although there's a huge economy around Bitcoin at the moment, it's all within the crypto space, so it needs to branch out. But it's a pro in the fact that I recall, even when I was a kid, I would have a bank account and they would take money from me if I didn't have enough in it. They would take money anytime I wanted to withdraw. They would take money when I wanted to transfer. There's always fees. It's ridiculous. So the bank's kind of nickel and dime you, and that's one of the big things that the creator of Bitcoin was trying to get away from. He wanted to get away from big banks, big government, and those that, the fat cat gets fatter, so to speak. So, which leads me into another con at the moment. There's still no mass adoption. Again, if you look at the market cap, this is, right now it's $464 billion. Bitcoin is 167 billion of that. It's about 36% of the overall market cap. And this is without mass adoption. And Bitcoin is the most adopted one of all of these. It's this big without being on the stock exchange, without Wall Street, without big investors. Now that is slowly changing. There is a ton of news coming down. The government, if you think about it, anytime the government hears that, $167 billion is exchanging hands and they have no say and they can't tax it. Let's just be honest, they can't tax this at the moment. They're going to start taking notice. All the banks around the world and all the governments around the world are starting to pay attention to cryptocurrency simply from that fact. They want a piece of this pie. And again, imagine right now it's about 1 to 2% of the population is using it. If that goes up to 3, 4, 5, 6% of the population, this number exponentially goes up because people start putting money into it. And the governments don't have a say yet, so they're going to dip their hand in it. So imagine right now, a con at the moment is there's still no mass adoption. Imagine if Amazon all of a sudden started saying they'll accept Bitcoin, or PayPal, or eBay, or some of these Walmart, something along those lines. So another pro/con, the rewards are decreasing, which we already talked about. So that's a pro and a con in my book, because one, it's a pro in the fact that it's going to create more demand. Con in the fact that the miners are going to be getting less and less. With that, there are transaction fees that have been increasing. Now, Bitcoin, I know, like I said, I know big banks, I was just complaining that big banks kind of charge you for transaction fees and things. Well, Bitcoin, when it first came about, it was a penny, 2 pennies, 3 pennies. It was basically nothing. Well, those fees are indeed starting to increase. And why are they increasing? Well, if you go back to this, again, as this blockchain gets larger and larger, you have to process tons of data in order to confirm it. So the amount of transactions occurring per 10-minute block are astronomical now, huge amounts of transactions. Well, what can the companies and the websites that use this do? They can charge a transaction fee, put you higher on the list, allow your transaction to go through faster. You still can pay pennies to have your transaction processed, but it's going to be put down on the bottom of the queue within the grand scheme of the blockchain. So if you pay a higher fee, your transaction can go through sooner. So this kind of just shows you kind of where we're at. So this kind of goes back to the mining and such. When Bitcoin first came out, its entire purpose was to have computers do the mining. You could basically connect to the blockchain and allow your computer to run in the background, when you're in bed and sleeping, and it would be figuring out these blockchains for you. In the beginning, there were so few people that in reality one person could figure out the transaction and get the entire, well, at the time I started was 50 Bitcoins per transaction or per block. Now it's 12.5. Well, what happened is the more people started getting on, the tougher it became. You had to start transacting faster if you wanted to stay ahead of the game. So somebody created these bad boys. And some of you watching this video may be familiar with them. I know some of my friends, we were all about these. What do these do? These things, you plug it into your computer's USB, connect to the blockchain. This thing ran at 333 megahash. Oh man, you were tearing it up with this thing. You were rocking and rolling. And then people bought 10 of these with a USB what do you call it, like a multi-USB port, and they have 10 of these hooked up with fans on them and stuff, and you were just destroying it. Well, then some of the big manufacturers started paying attention. I don't know if many of you guys have seen, this is one that I actually had back in the day. It's called the jalapeno. So if you imagine, this is 333 megahash, you get 3 of these, you get a gig. You get 9 of these and you got 3 gigs. Well, this thing ran at 7 gigs. Again, you plug this thing into your computer, connect to the blockchain, you're hashing away and trying to figure out these blocks, you were cream of the crop. So what happened? You had to keep getting bigger and bigger. Well, fast forward to now, you now have this bad boy, which is the most recent one that's come out. It's from a company called Bitmain. It is currently running. So this was mega hash. This was 333 mega hash. These little bad boys, 7 gigahash. Well, this thing runs 13.5 to 14 terahash. Consumes about 600-700 watts of power out of the wall. Heats your whole house, really. But again, you needed speed, and you need to be able to transact tons of blockchain information as fast as possible to get reward. Well, fast forward, here's where we're at now. So mining at home has become almost obsolete, in my opinion. I used to mine at home, using all of these actually. But it becomes, you can't compete with these. So there's farms out there that have these things lined up to mine. I mean, look at this. This is just a smidge of what this company has. The current hash rate of the entire market is, I don't even know what this is, 26 million terahash. That's just incredible. So at the moment, mining is indeed still beneficial. The transaction fees go toward the miners, as well as the blocks rewards. That 12.5 Bitcoin release every 10 minutes goes to the miners. Well, there are farms of these throughout the world. This particular one is what we call cloud mining. So in reality, if you still want to mine and get the reward, it's basically a passive income. Is you can go to these different sites, and I'll put some links in the description below, and I'll tell you which ones I use. And you can basically send them, if they have mining power available, you send them some money, and they give you hashing power. Basically, you can buy 1, 2, 3, 4, however many terahash of data that you want to buy from them. And what happens is as their farm mines, if they get the reward of 12.5 Bitcoin, or if all the transaction fees that they process, it goes into a pool, and based on the amount of terahash that you have, you get a percentage of it, and they send it to you. At the moment, I use 3 different cloud mining services at the moment, and all of them just generate passive income. The other good thing about it is, if you imagine this, where am I at? If this value goes up, so let's say for instance you're running 10 terahash through a mining farm, and you get I'm going to make up a number here, 0.1 or 0.01 Bitcoin each week, we'll say. So you'll get 0.01 of this. Well, imagine 0.1. In fact, I'll figure it out here real quick. 0.01 of the current price of 9,800, we'll say, gives you $98. Well, let's imagine you're still getting 0.1. However, this goes up to 15,000. Oops. Now you're getting 150 a week. So the higher this goes, the more value you're getting for it. So there is one catch to that. The catch is this, wrong side, this bad boy. So if you imagine, let's say you have 10 terahash of mining power, well, you're going to be getting, I'm making up a number again, 0.1 Bitcoin per week, we'll say. Well, look at this mining power. A month later, you're maybe getting 0.009. A month later, 0.008, because the mining power, the difficulty is becoming that much harder, and the amount of mining rigs coming on board is going up. So my strategy to combat that is about once every month or so, I try to roll some of my profits into more mining to maintain my status. Hopefully eventually I'll get ahead, but my goal is to really mine as much as I can at the moment before the next halvening, which will be in 2 years. And then even on top of that, my goal is to get as big of a bankroll of Bitcoin as I can. So, this is long-winded. Hopefully, I haven't bored you guys. Again, this is my first YouTube. I'm not very exciting at the moment, but hopefully that'll improve with time. How do you get it? So again, how do you get Bitcoin? You can either mine it, you can trade it, you can buy it. Mining it, going back to like I was just telling you about, some of the sites that I use. The reason I use these sites, and I'll tell you why. There's this one in particular, OXBTC, has been around. I've been using them since 2013, I think. Have always paid out. You always have to look for scams. There's tons of scams in the crypto world because it's the newest, hottest thing out there. People are making millions of dollars doing this. If you're really good at what you do it full-time jobs. This one is reliable. I can vouch for it myself. I've been using them for years. They've always paid me. Their fees, they're not too bad. They have to pay for electricity, obviously, but they, you can basically purchase mining through them in some capacity. They actually have some on sale at the moment. And the reason I like this particular site is because it's lifetime mining. So regardless of whether that difficulty goes up or not, and let's say you never buy any more in mining ever again, and your piece of the pie dwindles slowly but surely over the next year, 2 years, it will continue to keep mining for you regardless. It's a lifetime contract unless Bitcoin drops so low that their electricity cost is beyond what the Bitcoin is worth, which I just do not see happening because, again, I'm a firm believer in this space. I want lifetime mining, and so I use this one because it's lifetime mining. You purchase it, you leave it, and you forget about it. Log on every once in a while, see how much money you got in there, transfer it out when you're ready. That's the only downfall I have on this one, is I wish it had automatic transfers out, but it doesn't yet that I know of. So the other one I like using is called MyCoinCloud. I've been using this one for about 2 years, if I remember right. Yeah, about that. It's came up on in 2015. This one is really tough to get into. They have really low fees also. Trouble with this one is it sells out so quickly. I have maybe 4 terahash of mining power through here. This one does do automatic payment every week, so about every Monday, if you've made enough to their minimal amount for payout, it just sends it to your wallet automatically, which I like. And again, it's lifetime. I want lifetime mining contracts, so it will, as long as Bitcoin is profitable, these mining farms are making money, so they ain't going anywhere. You just need to find a reputable one. This one I feel is reputable. And it's lifetime contracts, so it's just continual passive income in the form of Bitcoin, or if you mine any of the other coins on this site. The other one I use, which actually you might recognize this, it's actually from my PowerPoint here, right here, Genesis Mining. This is one of the first big cloud mining services that came about. A lot of people thought it was a scam at first, because it was one of the first ones that kind of one of the first movers that did this type of thing. But again, why I like this one? Lifetime mining. This one, again, because it's so popular, sells out very, very quick. They have a lot of other cool features. They do auto withdrawal also, so you literally can just purchase, set up your wallet, and just forget about it. I try and log on periodically and follow their email, and I'm on their email list, so anytime they have new mining power available, I try and jump on it. But there's also ways that you can actually allocate. So even though you're mining Bitcoin, say for instance you just don't want to mine Bitcoin anymore, but you want to use your Bitcoin mining power for something else, that you can actually point your miners elsewhere, which is kind of really cool. The only one that I use that doesn't have lifetime mining is this guy, Hashflare. Reason being is these will be limited contracts. So if you see here, like 1 year contract, 1 year contract for Litecoin or Bitcoin, Dash, 1 year, 1 year. Look at all of them are out of stock. Oh wait, look. Oh sweet, Bitcoin available again. But the reason I like this particular one is you can actually compound it. So you can actually sign up for a year contract, buy as much as you want, and you can then kick your earnings back into more mining power. And so it almost like compounds your mining power to start making more over time, kind of solving the problem I was talking about before of this whole mining difficulty thing. So that's pretty cool, and it does auto withdrawals and things of that nature. So so those are the main ways to mine Bitcoin. Trading is a whole nother bag of potatoes. You can trade. There's tons of markets out there. One of the big ones right now is Binance. Oh, I was logged in. You can't see it now. Binance is huge. There's a ton of markets out there that you can actually put money into, and it's like stock trading, basically, 24 hours, 7 days a week. We'll do that in a different video. Last but not least is buying. So you can actually buy Bitcoin, which is the easiest way to go about it. The only one that I'm familiar with, or that I trust, and it's U.S. based, so it's regulated pretty well, is Coinbase, Coinbase.com, and you can literally come in here and there's tons of things you can do. You can actually put on your credit card or a debit card and have it every month pull $50 and buy Bitcoin for it, and it puts it right into your wallet onto their site. You can do whatever the heck you want with it. Mine's obviously all blank at the moment, but this is the easiest way. I mean, it's literally you just kind of plug in your information and you get Bitcoin. So if you simply just want to buy some and kind of hold on to it, this is a really easy way of going about it. So where do you keep it? I will try and go into this a little bit more in another video. There's tons of different options now. When I first started, it was basically paper wallets. So if you imagine kind of going back to this, you had a piece of paper with this entire thing on it, as well as your private key of 64, and you had to like type it. You had to look at it like, okay, 16K capital P lowercase t, from the paper wallet into the computer whenever you wanted to use it. It was such a pain in the butt. Really the only thing I use paper wallets for now, which actually no, I don't even use them anymore. I used to use it for what they call cold storage. And cold storage is where you can take your assets off. No, you're not really. You're taking it out of the internet so it can't get hacked by any means. Now, Bitcoin's never been hacked itself, but just in case, you can put your wallet number and your private key on a piece of paper, and that piece of paper, in essence, is your wallet holding money, if that makes sense. Now they've become digital versions of that, so I actually use a digital one. It's a cold storage digital wallet. I call it Nano S, which I can show you at a different time. It's a USB digital wallet, and there's a bunch of other ones. There's some that are on your computer. Even though it's on your computer, it can still be hacked if you think about it. Even if it's a cold storage on your computer, there's one called Exodus Wallet and things of that nature that you can actually store Bitcoin on your computer itself. But again, if your computer crashes and you didn't write down your private key, there's a lot of different factors. Some people keep it on the exchanges. This is a big no-no. Exchanges get hacked all the time. It's even happened to me at one point. A lot of people, it's very convenient. The exchanges make it very easy to deposit your cryptocurrency onto their exchanges and start trading like stocks, and they make it very easy to, because they're doing massive amounts, so you're actually able to transfer really quickly, because what they do is they pool all their transactions into one big pot. They pay the fee, so it goes through quickly. Exchanges make it very convenient to have your stuff all in one place. However, I can't stress this enough, I've seen so many exchanges get hacked. No fault of your own, the exchange itself will get hacked. So anyway, closing thoughts. Sorry this is a long-winded video. I'll try and shorten it when I do the editing. My opinion, blockchain technology, so this is the technology surrounding Bitcoin, has been changed with all the other coins that are out there. All of these different coins have taken and improved upon Bitcoin in some manner. Faster transactions, no longer dealing with that, kind of ridiculous chain mechanism. So it's still considered a blockchain technology, but they have found ways of streamlining this whole 150 gig continual chain type of scenario. And I'll go into some of those that I like. Bitcoin, in my opinion, is going to be here for a while. Even with the pros and cons we talked about, and the cons and I don't think it is going to be used as it was intended, which was a peer-to-peer transaction-based system where you could just instantly transfer funds from one person to another. I don't think that's its purpose anymore. Now, in my opinion, I think it's going to be more of a store of value. A lot of people link it to kind of like gold. Nobody buys anything with gold. You don't go into the grocery store and pay in gold. But gold has an intrinsic value that, due to its scarcity and its need and whatever you want to call it in the world, it has a store of value. So just like that, if you imagine Bitcoin has a store of value, it is, of the entire market cap, it has 167 billion right now. So when the big investors want to come in, when it finally goes mainstream, one, everybody has heard of Bitcoin. If you want to get into the cryptocurrency space, you're not going to go onto the computer and type Cardano. You're just not going to. You're going to go in there and you're going to type, what is Bitcoin? So this is going to be the first one that everybody pops up to at the moment. Everybody's going to want to invest in this. This is the gatekeeper, so to speak, of all these other ones. The other thing is, if these big investors, if big industrial money wants to come in, say for instance somebody says, I want to buy, $10 million of Bitcoin, these big Walmart fat cats. Well, imagine if they came over and said, I want to buy $10 million of this one here, Stellar. The entire, that's maybe not a good example. Let's come down a little bit. Let's say 0x. It's 823 million right now. So if big investors want to come in, if 2-3 firms come in and they want to buy 10, 15, 20 million, 50 million we'll say, that's a huge dent in this value right here. It would drive the price up so high, because you would have to have that many people willing to sell, and as it goes up, this price will just skyrocket. Every million they try and purchase instantly, so to speak, is going to drive this up. Whereas if you come up here where this one's dealing in billions, 167 billion, 10, 15 million on this, it can absorb it, for lack of a better word. So this is going to be the main gateway. It's the only one at the moment that can absorb large amounts of money coming from industrial investors. What do I think? They do need to make some adjustments, though. If Bitcoin does want to stay on top, there will have to be some adjustments made. Now, there's a Bitcoin Foundation that does a lot of this stuff, and I won't get into it, but they do try and change things, but try and stay as pure as possible to the original concept. It's arguably, like I said, it's arguably the most adopted and well-known. It's going to be the gate, the entry gate for mass adoption, kind of going forward. So a lot of people ask me, is Bitcoin going to, the end of last year, Bitcoin hit $20,000 a coin. In fact, we can pull it up here. So if you look back in, I think it was December, let's look. It's 19, it's hard for me to get the mouse perfect, but that one right there, it was $19,000 a coin for Bitcoin back in December. So compare that to, at the moment, it's 9,000. It's actually gone down half of its value from December in this amount of time. That's already kind of coming back up onto an upswing. So people always ask me, is Bitcoin going to be around? Is it here to stay? Should I invest? One, this isn't financial advice. Don't take my word on it. But I believe in the technology. I believe in crypto. I believe in blockchain. I believe the space is here to stay. I think Bitcoin is the gatekeeper. It once has hit 19,000. It can once again hit 19,000, which is twice as much as what this is now, which means if you put $1,000 in now, you'll have $2,000 at some point, in my opinion, this year, and so on and so forth. But again, this is just my opinion. And I think that's about it. What I want to talk about next time, anything you guys may suggest, throw it in the comments. Sorry, it's probably a little bit long-winded and boring of a video. I haven't done videos like this before. Hopefully I'll spice them up going into the future. But please message me if you want to know anything. Ask me anything you wish. If you want a video on a particular coin, if you want a video to learn more about a particular aspect we talked about today, whatever it is. The whole point is this is supposed to be our channel. It's supposed to be for me and anybody who wants to join. Any questions that you want to ask me, I'm going to continue to tell you my journey and kind of how I got to where I am, and we'll go from there. So until then, I guess everybody take care, and thanks for watching.